Hi dear students, today we can discuss about in cash flow statement operating activities how we will treat provision for tax and the proposed dividend. See how to treat the following items in cash flow statement. So two items in the balance sheet, one extract of balance sheet is given. One item is provision for tax. 2-year information given 31st March 2017 and 31st March 2018. So 2018 is the current year, 2017 is the previous year. Normally provision for tax 2-year information given, we know that current year, that is this 2018, 10,000 rupees we will add it to profit after tax to calculate profit before tax. And the last year provision for tax is the tax paid of the current year. Okay. Proposed dividend also we know, when you calculating profit before tax in operating activity, current year proposed dividend we will add, and the last year proposed dividend is the dividend paid of this year. Okay. This is a normal treatment, but when any additional information given related to provision for tax or dividend, see here one additional information given, tax paid during the year is rupees 70,000, as well as one more information given, dividend paid during the year rupees 10,000. So provision for tax or proposed dividend, any item, any additional information is given downside the balance sheet, we have to prepare the account, provision for tax account, as well as we have to prepare proposed dividend. Okay, when we have to prepare these accounts, when any additional information is given related to this item. Okay, so first we can think about provision for tax. So it's additional information what is given, tax paid during the year is rupees 70,000. So related to provision for tax, any additional information given, then what we have to do is we have to prepare provision for tax account. Which account you have to prepare? Provision for tax account. Normal ledger format, you know, the same ledger format you have to follow. Particulars amount, particulars amount. We know here provision for tax 2-year information given. This is the previous year 2017, 2018 is the current year. Okay. Now when you prepare provision for tax, it is a liability. Actually provision for tax is a credit balance, it's a liability. That is why always you should remember it's an opening balance. Opening balance means first year amount. Previous year is 75,000. So first year amount is the opening balance. Current year amount is the closing balance. So opening balance you have to write in the credit side as balance brought down. Which side you will write? Credit side we will write as balance brought down, opening balance, because it is a liability. How much rupees? 75,000. So balance to opening balance, when you are writing we will write by balance brought down 75,000. Okay. Then closing balance, that is current year amount, that is 10,000. This is a closing balance that we will write in the debit side as last item to balance brought down. So opening balance in the credit side because it is a liability, and closing balance we will write in the debit side as last item to balance brought down 10,000. Now see the adjustment. In the adjustment tax paid is given. How much rupees? 70,000. So whenever tax paid is given, we know generally for tax paid, tax account debtor to cash or bank. So here when you prepare a provision for tax account, so the generally will be provision for tax account debtor to bank account, tax paid. So that amount is given to bank account 70,000. So opening balance we written, closing balance we written, tax paid is given, the adjustment we written, we will write to bank. For understanding only bracket I written tax paid. Okay, 70,000. After posting these three items, what you have to do? You have to total both the side. This side is 70,000 plus 10,000. It will come 80,000. So this side only one item 75,000. So this side is more. So both sides we have to write 80,000. From this 80,000 we have to minus this 75,000. Balance you will get 5,000. This is this year provision for tax. So we will know that this year provision for tax we will show in the profit and loss account debit side. For company is concerned, profit and loss account name is statement of profit and loss. So we will write here, we will transfer this amount to statement of profit and loss account. What to understanding, I am writing in the bracket, provision for tax during the year. This year provision for tax. So why we prepared this account? Because when you calculating profit before tax, normally we have to add to the profit after tax the provision for tax of current year. So provision for tax of current year according to this example is how much rupees? 5,000. Tax paid is how much? 70,000. This is the last item in operating activities we have to minus. But when you calculating profit before tax, which amount only you have to add? This 5,000. Okay, so which situation you have to prepare? In additional information, tax paid, or sometimes tax provision for tax during the year. Suppose provision for tax during the year is given in the question. So here you will write provision for tax. Then we will total balance will come this side as tax paid. So which is the missing item you can find out. Always remember provision for tax account, this 4 item only will come. Any 3 item given, the difference will be the missing item. Okay, sometimes this 3 item will give, the difference will be provision for tax of current year. Sometimes provision for tax of current year is given, then the missing item will be the tax paid. Okay, now second item we can take proposed dividend. Proposed dividend also additional information given, dividend paid during the year. If proposed dividend additional information is given, then you have to prepare which account also? Proposed dividend account. So proposed dividend account you have to make. So proposed dividend account format, particulars amount, particulars amount. We know proposed dividend is a short-term provision. These both are short-term provisions. It is coming under liability side of balance sheet. So it's a opening, it is balance is credit balance. So opening balance we will write in the credit side as balance brought down. In the question, first year amount 2018 amount 60,000, that we will write credit side as by balance brought down. And the second year amount, that is closing balance, is 90,000, that we will write in the debit side as last item to balance brought down. It is not brought down, it is carried down. Okay, so balance carry down we have to write here. This is balance carry down. Okay, so balance carry down will come debit side to balance carry down, closing balance. So opening balance to balance brought down, closing balance is carry down. In the previous also it is carry down only, closing balance we will write carry down only, not brought down. Okay, so keep in mind provision for tax account also same way. Opening balance brought down, closing balance carry down. So here also opening balance brought down, closing balance carry down. So opening balance first year amount, closing balance second year amount. Now what is given in the question? Dividend paid. Dividend paid generally we know dividend account attached to cash or bank. So in proposed dividend account we will write here in the debit side to bank. For understanding we will write dividend paid. How much dividend we paid in the question? 10,000. So dividend paid 10,000. So 3 information given in the question: opening balance, closing balance, dividend paid. Now we have to total both sides. This side we know 90,000 plus 10,000, 1 lakh. This side only 60,000. So which side is more? Debit side is more. So both the side we will write to 1 lakh. From this side we will minus 1 lakh minus 60,000, we will get 40,000. So this is the proposed dividend of the current year. Okay, so this we will transfer to profit and loss appropriation account. For company is concerned, profit and loss appropriation account name is surplus balance as per statement of profit and loss account. So this is for understanding a written proposed dividend of current year. So this amount only we will add in operating activity for calculating profit before tax. and this amount dividend paid amount we know dividend paid is a financing activity, so this amount will go to financing activity. This amount will go to for calculating profit, net profit before tax, we will add this amount. Okay, so don't take which amount, this amount. Why? Because additional information is given. Additional information is not given, we will already know. We will take the current year information, we will add. Okay, previous year you are considered as the paid amount. Okay, but additional information given, you have to prepare account like this. So keep in mind, suppose proposed dividend current year is given, then tax paid you can find out. This 2 we will add, this difference we will get as tax paid, dividend paid. Okay, so this keep in mind, this format. Some questions like this questions can come in examination. Okay, see this very well and practice like this some questions. Okay, thank you so much.